In 2008, the world was introduced to a revolutionary concept: Bitcoin. This was not just another form of digital currency, it was a groundbreaking innovation that promised to change the way we think about money forever. A mysterious figure using the pseudonym Satoshi Nakamoto published a white paper outlining a decentralized digital currency. This white paper, titled Bitcoin, a peer-to-peer electronic cash system, detailed how Bitcoin would function without the need for a central authority, relying instead on cryptographic proof. This new currency would operate on a technology called blockchain, a public ledger distributed across a network of computers. Blockchain technology ensures that every transaction is recorded and cannot be altered, providing a level of security and transparency that was previously unimaginable. Unlike traditional currencies, Bitcoin promised freedom from central banks and government control. This decentralization meant that no single entity could manipulate the currency, making it immune to the whims of governments and financial institutions. It offered a new way to think about money and value. Bitcoin's value is not tied to any physical asset or government policy. Instead, it is determined by supply and demand within its network. This concept was revolutionary and challenged the very foundations of traditional economics. Bitcoin's creation was a direct response to the 2008 financial crisis. The crisis exposed the vulnerabilities and flaws of the global financial system, leading to widespread economic turmoil and loss of trust in financial institutions. People were losing trust in traditional financial institutions. Banks that were deemed too big to fail were bailed out with taxpayer money, while ordinary people faced foreclosures, unemployment, and financial ruin. They were searching for alternatives. The idea of a currency that was not controlled by any government or financial institution was incredibly appealing to many who had been disillusioned by the crisis. Bitcoin, with its promise of transparency and decentralization, offered a glimmer of hope. The process of mining Bitcoin, which involves solving complex mathematical problems to validate transactions, ensures that the system remains secure and transparent. It represented a departure from the old, broken system. Bitcoin's decentralized nature meant that it could not be easily manipulated or controlled, offering a more democratic and fair financial system. This new digital currency had the potential to empower individuals and reshape the financial landscape. By giving people control over their own money, Bitcoin could reduce the power of traditional financial institutions and create a more inclusive economy. As Bitcoin gained popularity, it started to be accepted by more and more merchants around the world. Bitcoin ATMs began to appear, allowing people to buy and sell Bitcoin easily. Bitcoin accepted here signs became a common sight in many places, signaling a growing acceptance of this new form of money. The media took notice and Bitcoin began to make headlines. Its price fluctuations became a topic of discussion, with some seeing it as a speculative investment and others as the future of money. News reports covered its rise and fall, and debates about its potential impact on the global economy became commonplace. Conferences and community events dedicated to Bitcoin started to emerge, bringing together enthusiasts, developers, and investors. These gatherings provided a platform for sharing ideas, discussing developments, and exploring the future of this digital currency. Security became a major focus for Bitcoin users. With the rise in its value, the need to protect one's Bitcoin became paramount. People began to use hardware wallets and other security measures to ensure their digital assets were safe from hackers and other threats. In developing countries, Bitcoin started to play a significant role in providing financial access to those who were unbanked. It offered a way for people to send and receive money without the need for a traditional bank account, making it easier for families to receive remittances and conduct transactions. Bitcoin also had the potential to promote financial inclusion and empower marginalized communities. In many parts of the world, women and rural populations have limited access to financial services. Bitcoin provided an opportunity for these groups to participate in the global economy and improve their financial well-being. The innovation sparked by Bitcoin extended beyond just currency. The underlying blockchain technology began to inspire new applications in various fields, from supply chain management to voting systems. The potential uses of blockchain seemed limitless, and many saw it as a transformative technology that could revolutionize numerous industries. As Bitcoin continued to grow, it caught the attention of governments and regulators. The legal status of Bitcoin varied from country to country, with some embracing it and others imposing strict regulations. The debate over how to regulate this new form of money was ongoing, with concerns about its use in illegal activities and its impact on traditional financial systems. The future of Bitcoin remains uncertain, but its impact on the world is undeniable. Whether it becomes a widely accepted form of money or remains a niche asset, Bitcoin has already changed the way we think about currency and value. Its legacy will likely be felt for years to come, as it continues to inspire innovation and challenge the status quo. The Bitcoin community remains passionate and dedicated to the vision of a decentralized, transparent, and fair financial system. As more people around the world learn about and adopt Bitcoin, its influence will continue to grow. The journey of Bitcoin is far from over, and its story is still being written. In conclusion, Bitcoin represents a new kind of money that has the potential to reshape our financial landscape. Its promise of decentralization, transparency, and empowerment has captured the imagination of millions. As we move forward, Bitcoin will undoubtedly continue to play a significant role in the ongoing evolution of money and finance. On January 3, 2009, the first block of the Bitcoin blockchain was mined. This momentous event marked the beginning of a revolutionary digital currency system that would eventually challenge traditional financial institutions and redefine the concept of money itself. This Genesis block, also known as Block 0, marked the birth of the Bitcoin network. Embedded within this block was a message from its creator, Satoshi Nakamoto, which read, "The Times 03 Jan 2009 Chancellor on brink of second bailout for banks." This message was a clear indication of the motivation behind Bitcoin's creation, a response to the financial crisis and a critique of the existing banking system. In these early days, Bitcoin was a niche technology. It was a concept that intrigued a small but passionate group of individuals who saw the potential for a decentralized form of currency. These early adopters were often tech enthusiasts, libertarians, and cryptography experts who were fascinated by the idea of a currency that was not controlled by any government or central authority. It was primarily the domain of cryptography enthusiasts and those curious about its potential. They delved into the Bitcoin white paper, authored by the mysterious Satoshi Nakamoto, which outlined the principles and mechanics of this new digital currency. The white paper described a peer-to-peer network that would allow for secure, verifiable transactions without the need for a trusted third party. The value of a single Bitcoin was practically nothing. In the beginning, Bitcoin had no established market value. It was a novel experiment, and its worth was purely theoretical. Early transactions were often conducted as a form of play or experimentation, with Bitcoins being traded for fractions of a cent. Yet, a small community of believers saw its potential. These pioneers were not deterred by the lack of immediate financial gain. They were driven by a vision of a future where Bitcoin could serve as a global, decentralized currency, free from the control of any single entity. Transactions were often conducted through online forums and chat rooms. Platforms like bitcointalk.org became hubs for discussion, where early adopters could share ideas, troubleshoot issues, and trade Bitcoins. These forums were the lifeblood of the early Bitcoin community, fostering a sense of camaraderie and shared purpose. Early adopters traded Bitcoins for fractions of a cent. One of the most famous early transactions was the purchase of 2 pizzas for 10,000 Bitcoins in May 2010, a transaction that would be worth millions of dollars today. These early trades were often symbolic, representing a belief in the future value of Bitcoin rather than its current worth. There was a sense of excitement and experimentation. The early Bitcoin community was characterized by a spirit of innovation and a willingness to take risks. Members were constantly exploring new ways to use and improve the technology, from mining and trading to developing new applications and services. These pioneers were building the foundation for a new financial system. They were not just users of Bitcoin, they were active participants in its development. They contributed to the code, proposed improvements, and helped to spread the word about this revolutionary new currency. They were driven by a shared belief in the power of decentralization and the potential of this new technology. The idea of a decentralized currency resonated deeply with many early adopters, who saw it as a way to challenge the existing financial system and create a more equitable and transparent form of money. This belief in decentralization was not just about technology, it was a philosophical stance, a vision of a future where power and control were distributed rather than concentrated.